A very tough week. A little better than even on the advanced decline line. Nice to see semiconductors doing a little bit better. Take a look at some of the sectors that are moving, and generally up to flattish on the rest of the market. We see a little bit of moves in consumer staples and healthcare. Energy is down. Energy is down, what, 8% for the week overall. Energy just went positive. That was the weak stock, as the weak sector as I was coming over today. How about today? What's going to be going on? Well, this is a quadruple witching expiration. We've talked about this many times. This is the quarterly expiration of futures and options. It'll be very big. We had very big volume on the open. Part of this gets done right at the open today. At the close today, we'll have a rebalancing where the S&P rebalances the weighting of the stocks. We'll have very big volume in Apple and Oracle, Microsoft. These are big buyback companies. They're involved. So you'll see some weighting revisions and some big volume at the close. Whether that moves the stock prices or not clear. The object is not to move the stock prices, of course. What else? Very extreme levels in the market internals. We talked about this a lot yesterday, but very rarely will you ever see 1,200 new lows at the New York Stock Exchange. Put-call ratio 1.7, 1.8 perhaps. Those are levels you haven't seen in a long time. The VIX at the highest level since February. And Lipper reported the second worst flows out for the year, although still not Titanic. It was about 1% overall here. Is there anything different this week? Why is the market down? Well, there's a couple things that have changed this week. It's not nothing. I think the most important thing is the Fed risk, what we call rate risk, is a big issue. And that's been around for a while now. The important thing is also U.S. political risk, I think, is a little bit higher than it was with Mattis leaving, and as well as with the partial shutdown. We also have economic risks, our old friends still elevated, trade war risk also still elevated. So the things that have changed this week is the rate risk is higher and political risk is a little bit higher. As for the end of the year, we've got 5.5 days of trading left. And that's what I'm concerned about. You drop 200 points a day with nothing going on because it's not a big event, and suddenly you're down 1,000 points. So I'm very interested in what's happening in the next 5.5 days. We have this typical news and liquidity vacuum. That always happens. Nobody does anything in the last few days. Selling pressure is moderate. Buying interest is very low, and that's the big problem. Normally, this is reversed. Selling pressure is low, and buying interest is moderate in the last 2 weeks of the year. Now we've got a different situation, and that's the concern. So who's the buyer? Remember, the hedge funds are in redemption. That's not going anywhere. Retail investors are frozen. Maybe you'll get some opportunities from mutual funds that are out buying, corporations, maybe the buybacks, and of course some hope with the pension funds rebalancing. Morgan Stanley says $90 billion to rebalance for pension funds. Wells Fargo says $60 billion. Maybe some of these midday rallies that you're seeing will be as a result of those pension funds.